Hi guys, welcome to today's video, and let's start with today's video. And today we are gonna talk about the company which is into the defense, and we are gonna talk about its Q2 result and the Concall. So we are gonna decode both of these. So sometimes a company does not change with the time, but it builds the future before the market even seen it. So AXISCADE is exactly that story right now. So from missile seekers to radar, from aerospace engineering to hyperscale electronics, and the company is quietly preparing for its biggest decade ever. So let's look at it. What's the biggest decade ever looks like? So today we are gonna decode the full Q2 and H1 of FY26 in simple language, and what they have achieved, what's coming next, and why FY26 to FY2030 becomes AXISCADE's golden run. So if you look towards its quarterly numbers, so that are also first half is stronger. So let's begin with the facts that Q2 revenue stands with 299 crores, which is up by 13% on YOY basis, and on QOQ basis, quarter on quarter, it's up by 23%. So showing very strong execution. While the EBITDA comes in at rupees 47 crores, margin hits are all-time high and of 15.7%, and PAT nearly doubled to 23 crores. For H1, okay, first half revenue reached at 540 crores, 43 crores, growing it by 11% YOY basis, with EBITDA of rupees 81 crores and PAT of rupees 44 crores, and EPS jumped by 53% YOY basis. So it's cumulatively of first half. That's what the numbers looks like. This is a linear growth. This is not a linear growth basically. So it is a structural shift in mix and capability. The engine of growth, so which is aerospace and defense take over. So AXISCADE growth engine is now extremely clear. So the core domain is aerospace, defense, and ESAI. What they tells about, which we are gonna look forward in this video, contributes around 75% of their revenue and operates at 19% margin. And defense is growing in the fastest, which in Q2 it was up by 37%. In first half, defense alone was up by 31% in the income or in sales. So aerospace also delivered a steady growth, with Q2 up by 16% and H1 up by 12%. So margin dipped in aerospace due to usual European summer slowdown, but the management expects that 18.5% average margin for the year. So the shift of high tech, high margin defense and aerospace is paying off now, and even gonna pay off in further. They have one vision which is known as Power930 Vision. So the $1 billion dream they are looking for, and it's real. So the most interesting part of the con call was the Power930 ambition, a vision to reach 9,000 crores revenue by FY 2030. So that's even crazy if you look towards their revenue currently and towards their ambition and target to reach. That's mainly multiple full times. So needs to look how they can achieve 9,000 crores in revenue. So management said clearly that FY26 core domain will grow by 45%. FY27 again it will grow by 45%, and for FY28 and 30 growth will be accelerated to 70% for both years. And once the new factories, lab and manufacturing lines are fully online, this is not a typical outsourcing business anymore. It's becoming a diversified defense, radar, missile and aerospace product company. So that's great. So if you look toward that H2 outlook, so the second half of FY26 outlook, which is also a strong kind of for Q3 and Q4, management front loaded execution in Q2 because of Q4 will have 2 to 3 weeks of disruption due to the shift into new facility, but they confirm that Q3 will be stronger than Q2 And FY26 revenue and EBITDA growth guidance remains intact, and ESAI, okay, will be the weak in H2, but aerospace and defense will fully offset that. So this is clarity which is rare in mid-cap defense tech players. But if you look toward their big strategic pivot from service to solution to product, is the entire company is undergoing inner transformation. No more plain engineering services. The new model is own IP, own product, and manufacturing depth and recurring revenue. So their FY26 goal is 30% increase per capita EBITDA, and already on track for that achievement. And they hired a global strategic advisor to review their loss making and stagnant verticals. Non-core businesses will be divested by March 2026. So they will be totally removed that vertical which are non-performing, and freeing both cash and bandwidth for that stuff. And this pivot is exactly how the small size defense companies should scale to become a giant. If you look toward their massive capacity build out, for India has not seen this scale in a small cap defense. So this was the highlight of the call. But AXISCADE is one of the India's biggest private sector defense manufacturing ecosystem which they are creating. The key facilities, if you look toward that, in Devan Hali, Aeroland, their capacity is coming of 1,65,000 square feet, where they will engineer for electronics, semiconductors, AI, test system, and flex board facilities for another hyperscale products ready now and certification by March, they are telling in this year. So Devan Hali Atmanirbhar Complex, DAC, which they are calling, is also it will be accumulatively 30 lakh square feet facility, and the phase 1 will be operational by September next year in FY27. And if you look towards in that phase 1, there will be a radar manufacturing in that facility, unmapped warfare systems and antennas support and integration of it. In phase 2 will be, and the phase 2 of that facility would be operational by December next year. So in that facility there will be aerospace field shop and supply chain units. So that looks crazy. And the third thing is coming is Hyderabad missile complex will be approved by this Q3, built with a strategic partner they have the partnership with, and the capacity for missile electronics and final assemblies. So the completion target for that facility of Hyderabad missile is March 2027. And the total capex from FY26 to FY28 looks like total 1500 crore capex, 1500 crore capex. Phase 1 is 150, then 450, then balance. So that's how their breakup of capex. And the fund, it will be fully funded from internal accruals plus partner investment plus bridge loans, no equity dilution plan. And this is one in decade capacity creation in kind of a company. So if you look towards our defense also, it is accelerating, and even global countries are interested in our missiles like BrahMos and all that. So it's a crazy company to look at. If this gonna play out, then it would be kind of multi-bagger, right? If you look toward the defense, the most valuable part of AXISCADE, so defense is where the magic is happening. The company broke down its future mix. So missile 40%, okay, rocket motors, seekers, launchers, electronics, and then comes radar and antennas, which is 30 to 35%. Then comes unmapped counter drone directed in energy, which is 15 to 20%, and grounded system, which is 10%. So margin here is already at 22%, and management wants that it will be lucky to maintain this for next 4 years. So meaning the bar is high, competition is intense, and the OEM management is critical. So the big program comes here is the next growth waves. Here the program that matters is counter drone system, emergency procurement order already received, deliveries are ongoing, goals are 20 to 30% market share in top 3 players, okay, laser hard kill system with CILAS, which is known as proven system, superior range of energy, optimized for 4x4 vehicles, and massive differentiation in the Indian market. So if you look toward the BrahMos Seeker, so that's the game changer. Indigenous ESA based Seeker trial will be targeted by this March. Before March they are targeting for, an order possibility would be in next year. So this Seeker would be 30% of their missile cost and huge recurring volumes. We look toward the Kusha missile, which is also in their program. Management hinted at very large volume, detail with it, but strategic importance is high. And if you look toward their MBDA global supply chain, the 3 test benches in FY26, 5 to 10 benches annually later, and integration both in India and global program. And if you look toward their BL program, so TA taken, which is known as antenna order expected in weeks, and LTR Ashwini radar would be by January. So, and there one of the program is QRSAM. The active starts soon. But revenue impact will be from FY27. This is a pipeline filled with multi-year visibility. If we look toward the aerospace, which is stable and high margin scaling slowly, aerospace continue to be stable engine. Q2 growth was 16% up. First half growth was 12%, and margin is expected to be around 8.5 average. So this is the shift to new facilities in Q4 is the only disruption in this area, but the Q2 was the front loaded to manage this. So if you look toward the ESAI, short term pain, long term opportunity, okay, ESAI segment is transitioning from design only to fully manufacturing. This means short term softness but long term big revenue jump. So hyperscaler comes under this. Hyperscaler 1 facility would be around 2 million in FY26 and 6 to 7 million in FY27 after the certification. Hyper 2 will be around $0.7 million to $1 million in FY26, expect to double in FY27. Drone control business is slowly but high software value added business. If you look toward their balance sheet, clean, tight and controlled. Net debt is just 50 crores. Gross debt is 163 crores. Bridge financing cap is at 50 crores. Company does not want to take any long-term debt. No dilution plan in a listed equity. No core disinvestment by March will further improve the liquidity. Working capital remains comfortable despite the long defense cycle. So what to track next is a real catalyst. So the TACN, which is antenna drone within a week, order within a week. So BLLTR order, radar order by January they are going for, and BrahMos Seeker trial will be by March. Counter drone pipeline and deliveries are there. So the hyperscale certification by March they are talking about. DSC phase 1 red lines by September and of next year. Non-core disinvestment by March and strategic partner investment by next year. So this will define FY27 to 28. So bottom line is that AXISCADE is no longer a typical engineering service company. It is turning into a diversified defense electronics plus radar, missile and aerospace manufacturing powerhouse. Strategic strong growth, clear guidance, high margin businesses, massive upcoming capacity and a leadership team that known for exactly where the Indian defense speeding is moving on. So FY26 to 2030 could be the most transformational 5 years in the company's history. And that what was from my side, and that's what we are gonna look, and that's what was in their Concall. So if you loved it, please like, share and subscribe this channel, and comment down me below which company do you want me to decode next, and let's meet in the next video. Bye bye guys.